I want to welcome everyone to another episode of the PRC Advantage. Today, we're privileged to have with us Mr. Michael Bachenheimer, who is Director of West Coast Originations for Pangea Mortgage. How are you doing, Michael?
I'm great. Thanks for having me, Charles.
No problem. We're happy to have you on our show. Before we get started today, we just have a couple of housekeeping items. One, if you are viewing our podcast on YouTube, do us a favor and like it and also subscribe. This allows us to continue to provide good content to our YouTube audience. And of course, if you're on Spotify or Apple Podcasts, we want you to do the same. Show your support for our podcast program. So today, we're going to talk about an area of finance that many individuals have questions about, and that's bridge financing, bridge capital. Now, we know that there are various types of capital available to transact a commercial real estate deal. We know that there's conventional financing, there's government-supported programs through the SBA, or perhaps Fannie Mae, Freddie Mac for multifamily, USDA loans. But the one that many have questions about is this bridge financing. It has very specific characteristics, and it's designed for a very specific purpose. And so we've asked Michael to join us from Pangea so that we can talk about this subject. Michael, if you don't mind, just give us a little information about your bio, your background in commercial real estate.
Appreciate the opportunity, Charles. So, I've been working in commercial real estate for about 20 years now in various capacities. I started on the hospitality side and realized there was a great big world of real estate out there beyond hospitality real estate. Learned valuation through a short stint as an appraiser, and then became a banker at Bear Stearns doing CMBS. From there, I went to more balance sheet, bridge lending in the mid-market, institutional quality stuff. I worked with some different groups like Latitude, which is now LaSalle, great, fantastic company. Also started the first mortgage origination business at a company called RFT, which was the American Realty Capital guys. We brought that to about 1.3 billion and sold it to Benefit Street. And, from there, I really enjoyed the bridge lending space in that kind of mid-market, but as it became more and more competitive and it became more and more commoditized with a lot of people in that space, I found the Pangea team here in Chicago and, really thought they had a great product that fit a niche that, was definitely not underserved, but definitely needed some creative thinkers and some ways to really help solve problems with creative financing mechanisms. So that's kind of how I got to Pangea. I've been a lender for majority of my career now. I really like the credit side of the business. I like looking into deals and digging into understanding whether or not they're good deals and really working with sponsors who get really excited about their deals and the transition that they're trying to enact within their deals. I think, there's, to your point before, there's different types of deals out there. There's the deals that don't need any heavy lifting or any lifting at all. Those are the deals that are 90% occupied multifamily, or they're, fully leased retail deals. We're not doing those kind of deals. We're doing the deals that have some kind of an issue, some kind of a problem that needs a solution. And what I try to do is come up with a creative way to solve that problem. And we do that with all of our own balance sheet capital. Pangea Mortgage Capital is a wholly owned subsidiary of Pangea Properties. We're a large multifamily property owner in Chicago with mostly affordable type housing, workforce type housing all throughout the south side of Chicago, Baltimore, and Indianapolis. I'd be remiss if I didn't say that, one of the reasons I really do like Pangea is they do have a mission, and that is to provide safe, affordable housing in underserved communities. And I think when you walk around our office and you talk to our CFO, you really do understand that there is a pride that comes with bringing safe and clean and affordable housing to people who need it in Chicago. And I think that resonates throughout what we do as a lender. We try to take on the hat that we wear as a borrower, and we try to figure out what we like in loans and working with lenders. And then we try to extrapolate that into our side of the business, which is the lending side.
Let's just start here, just so that we kind of break it down for them. How would you define bridge capital or bridge financing?
I think bridge capital, bridge financing specifically, is a shorter term financial instrument that brings capital into a deal to help solve a problem.
Let's give an example of a deal that would be a bridge capital. So Michael, let's say for instance, I came to you with a deal. It's a multifamily project. Let's say I purchased a note from a bank. Okay, and it's an asset, a multifamily project that's not performing. I got the note, the property, if it's stabilized, if it's running fine, there's no issues with it, it would be valued at $10 million. The previous borrower had a loan on it for $6 million. I bought this non-performing note where the owner is not paying the note on it. I buy it for $4 million. Now, and I foreclose on that note. Now I have this property, and I need $4 million to acquire this note and to foreclose on the note. Is that something that you would loan on?
We definitely could look at that. What I would want to learn is I'd want to learn the holistic approach to what you're doing, your full business plan. So I want to understand, when you buy that note, what's your cost to getting to the collateral? What's the timeline to getting the collateral? What are you going to do to change that $4 million value that you're buying it to turn it back to a $10 million value? Are you going to bring in a construction crew and rehab all the units? Are you going to, do you have a tenant in your back pocket for the retail space at the front?
Right.
There might be one. We're going to look at that. We're going to see what your costs are. We're going to understand the full cap stack, and we're going to want to give you some percentage of that amount, so that you're bringing in equity as well, and your interests are aligned with us to bring it to turn it from a $4 million acquisition price plus pursuit costs to a $10 million value.
Okay, yeah. So basically, this would be the classic problem-solving type structure where you're looking to partner with that developer or that owner-operator to create value in the asset. And,
correct.
And if there's a clear strategy and business plan that show where there's this creation of value, then it's something that you would potentially have interest in. Is that correct?
That's it. Absolutely.
Yeah. Now, so how would you price a deal like that? I mean, would I get like a 4% rate on a deal like that?
Not from us. But no, I think those are deals that we would have to run all of our different yield hurdles on. I would say we don't do a lot of note on note financing, but if you were able to get the collateral, so you actually were able to get to the first mortgage position, or first, I guess, you were able to get to the property, or get to the deed of trust, and you're able to own the asset clear, then it's a different rate than if you're getting a note that we have to bake in the potential pursuit costs depending on where it is. If it's Los Angeles, California, or Santa Monica, California, and we know it's going to take a year for you to get to the property, or even more, that's going to factor into our rate.
Right. Let's say I use another form of financing to purchase a note. Now I have control over the property, and my cost basis into this deal is $4 million. And I'm looking to obtain a loan to renovate the property, upgrade the property, get it to a stabilized point. Still there's a problem that has to be solved.
Yeah.
But you're more interested in that type of deal where
we can do both. I'm saying, one is like a 12% rate. The other is probably closer to an 8 or 9% rate.
Okay.
A different type of animal. And it's It's also a different structure. Maybe we need recourse, or maybe we need, a completion guarantee on your construction work. We have to dig in and understand the metrics and understand the individual situation of each transaction. But that is either way is a perfect example of what type of stuff we're doing. So to dig a little deeper, what we're doing, we're the kind of guys who come in and help a construction project where the sponsor's been building single family homes and has decided he wants to build a multifamily property. So he's a great guy, great sponsor, great gal, whatever, but hasn't done it before, needs someone to take that first step with them so they can bring their track record. That's the ideal type there. Or maybe to your point, it was a distressed asset and, none of the banks want to touch it for a construction, but it needs a lot of work. That's another deal we can do. Maybe it's a retail center where your main tenants all just left because of COVID, but you're a really good retail operator and you're getting the property at a great basis because you're buying it from the bank who just foreclosed on them, and you just need to close in 30 days or in 21 days and you have money hard. We can do other types of deals that have less hair per se on them, but also just need to close quick. We did a deal in Baltimore last year that was being bought at auction, and to win the auction, he had to put a 15-day diligence and closing period. So we did a $30 million loan in inside of 15 days, start to finish. There's the problem is when guys get themselves into those situations, they want to make sure they're dealing with someone who's got balance sheet capital, who's got the structure in their credit culture that they can make those decisions quickly and get someone to the table quickly. And that's what Pangea can do. And that's why I like it and why I've been successful originating deals here.
Okay, well, very good. Now, let me ask about some of your underwriting metrics. What are some of the key metrics that you're looking at to determine if that deal is feasible, financeable through your group?
So we look at a lot of different factors. Again, we look at each deal individually and holistically. I would say what we're looking for at the end of the day, we're looking for the stabilized pro forma to have the right debt yields that offer more traditional financing to take us out, or a sale. So we're looking at both a sale exit or a refinance exit. We want to make sure that both of those exits are very well boxed, meaning there's enough room and enough wiggle room where if they miss projections by 5 or 10%, we're still okay.
Right. Okay. Well, good. That makes a lot of sense. So now Pangea has been in business for quite a long time, but how long has Pangea been lending?
We've been lending for about 5 years now, in different iterations. We've really made a big push in the last 2 years. I came aboard to start bringing up the West Coast. We have a team of, I think, a dozen professionals just on the finance side. Then we lever the other side of the house, which has about 500 employees as well. We're trying, so when we do construction loans, we bring in our construction team. Pangea has a separate construction arm that does construction management, renovation of multifamily. We bring those guys in if we need the help. We bring our acquisitions guys in to help us value on the front end on deals. So we're pretty flat, even though we have a lot of different arms within the group.
Okay, well, very good. Yeah, I know that we've had an opportunity to work with you guys on a couple of deals, and
yeah,
that proved to work out well for us. Our clients were happy. You guys have always been very responsive. I personally have had an opportunity to visit your headquarters in Chicago when we were looking at some opportunities down there. It seems like a group that's socially responsible and one very well connected in terms of that Chicago market. But yeah. I just really appreciate the way that you guys operate your business and the way that you treat your customers and your partners. It's always been a great experience for us.
And Charles, we appreciate that. And, that's definitely what we strive for. We strive for just honest and transparent operations. And, I know it goes through every level of Pangea.
Okay, well, very good. Well, Michael, it's been a pleasure having you on our show today and to talk about your company, Pangea.
Yeah, my
Uh,
pleasure.
yeah, and hopefully we get to transact some more deals now that things seem to be opening back up a little bit.
Yeah, we're excited. I think the first couple months of the year has definitely been a lot better than March on from last year. So
Right.
we are definitely excited about the future.
Absolutely. Well, thank you. And we'd love to have you back on our show at some point in the future and just talk about new things that you're doing if you're inclined to do so.
Great, my pleasure, Charles. We appreciate it.
Okay. Thank you so much.
Thank you. Now.